Hello, I'm Ian Hawkins. Today I'm talking to Andrea Reynolds, who's the CEO and co-founder at Swoop, about what the latest budget statement means for your SME. Andrea, lovely to have you on board. What are the changes in the latest budget that has caught your eye, or is it just business as usual?
I think we all went into this budget thinking we were just going to hear about welfare cuts and a bit about defence spending, but actually there was a key announcement that I think is very impactful on businesses in the UK, particularly those who are struggling with cash flow when it comes to making tax bill payments. So the big announcement there is that the government has said they no longer want to see HMRC as a cheap bank. In other words, when it comes to creating, making a VAT payment or a self-assessment payment, income tax payment, in some cases, people try and go for time to pay, so spread the bill out over a period of time. If you're lucky, you may get that approved by HMRC. And the other option is people just don't pay the bill or don't submit their return. So they've announced pretty tough penalties on both sides of the equation. If you don't submit on time, don't pay on time, in terms of without having the time to pay, you're looking at 3% on your tax bill that's due for the first 15 days. An additional 3% if it's past the on 30 days. And then after 30 days, it turns into 10%. That can be of money. If you do manage to get time to pay, they've added on an extra 1.5% onto your interest rate. So it's going to come out at around 8.5% interest. So what does that mean? We need to find new ways to look at unlocking cash flow to pay that bill, stay on top of things with HMRC while also being able to run your business. So I think that's where products, particularly in our panel of lenders, I think that's where VAT loans and overall tax loans will come into effect to really help those businesses that may struggle with that. So that's probably one of the biggest announcements from a business perspective. I would say, yes, we were expecting some announcements on defence spending, and some may say, well, what's that got to do with business? Actually, it's a good news story for business. So an increase in defence spending of 2.2 billion. What does that mean? We're looking at investment in new innovations. We're looking at cyber. We're looking at drones. And so anybody who's in the supply chain of the defense industry, good news. And there is a direct correlation between countries that spend on defense and countries that have high levels of innovation. You just need to look to the US for that. So that's something that I think as a business community and a community that's looking for innovation, that we should be welcoming. The other one that I would say a sector to talk into would be construction. So in terms of it's business as usual. However, I think with the planning reforms that are coming, the announcement of further house building for affordable and social housing, that in itself lifts the economic growth side of things. Anybody who's in the construction industry that can supply into that, it's good news. And that's alongside a skills package of 625 million to upskill. They think it'll be approximately 60,000 workers, because one of the biggest constraints in the construction industry at the moment is access to skills to actually deliver on projects. So, you know, we probably went into this spring statement thinking, not really much in there for business, but there are some of the headlines, and there are some other nuances in there, Ian, that we can get into in terms of, okay, there wasn't a number announcement at the spring statement, but it's what can we expect later on in the year for the June spending review, and what can we anticipate later on in the year in terms of other plans and consultations that the government has going on at the moment.
So quite positive for defence and construction, but every business is being hit by the national insurance rise and the raise in the minimum wage. Yeah, we get it. We've got to put money in workers' pockets, but what's this doing to SMEs?
Yeah, so April 1 is when the national insurance increase goes into effect. And it's significant for business. Just doing some calculations for some of our clients at the moment. This is not a number to just think, oh, I can absorb this in. And we're hearing from a lot of clients they're considering not hiring now, reducing their growth plans. There's some mitigation policies that you can put in place that might be worth considering now, particularly with the rise. And that is, there are salary sacrifice schemes. So this is where it's a non-cash benefit, or taking out of their salary into other benefits, where you then reduce your national insurance bill. And so that can be the pension salary sacrifice. It can be what's called holiday trading, where your employees can buy and sell days from the company. It could be getting an EV car or a cycle to work scheme. And they're saying that typically when somebody introduces a scheme like that, the reports are showing you can save between 50 to 150,000 for an average small and medium business on these schemes. So before you start being a bit draconian on, do I need to let someone go or reduce my hiring plans or absorb this cost, maybe looking at mitigating measures like that. And the other being, it's just in general, I think business owners now really need to be strategic with their cost management. And so for us, that's why, we look at the cost savings, because every penny counts with the energy price cap rise, with this national insurance rise, with the rise in the minimum wage. Our cost of doing business is going up every single day. And then add on to that, our cash flow is being squeezed when we've got tax bills to pay and we can't use the usual facilities that we were using. So really, it's about being attentive to your cost structure. And, that's why Swoop, we're really passionate about cost savings across energy, insurance, banking, etc., to try and unlock some of these savings for businesses.
Yeah, I'm looking at this report from the London Chamber of Commerce and Industry, which has done a survey of 150 firms in the capital. And all right, London firms have probably got higher overheads than most, but they found about 2/3 of them are going to scrap or lower pay increases and stop hiring new staff to stay afloat. What can a business do if they're having to make that kind of decision?
That's what I'm saying. I think for us, and even for our own business, what do we do in this instance? So we have introduced salary sacrifice schemes to, give benefits to our employees who are highly engaged in these schemes, and see them as an extra benefit. So it's actually good for retaining talent as well. So that's one aspect. And the other, as I say, is just being more measured on your cost management across your essential services. SMEs are the most overcharged customer segment. And the reason for that is we're so busy running our businesses, we don't have time to do cost comparisons. And so that's where I'm saying that's why we're passionate about delivering that service to our SMBs. So there is cost savings to be unlocked in your essential services. You just don't know it probably if you haven't had time to review it or sent it to someone like us to review for you. So they're the first places we start. I do think it is coming down to salary increase freezes. And then, last line of resort is not hiring or having to make redundancies.
Okay. Because the government is talking a lot about growth. It's banging on and on and on about growth. But where is it going to come from? It can't just come from...
Yeah. I mean, for the government, it's a pretty bad state of affairs 5 months in, and, they're a government with a central mission of growth. And now the OBR is slashing our growth forecast for this year down to 1%. And then let's be honest here, we're sitting here today on a day where we know that tariffs are coming. At least that's as of today. Trump might change his mind tomorrow, but it's looking like tariffs are coming. And actually the forecasts are, if those tariffs ring true, that's going to slash another 1% of growth. So we could be in a either neutral or recessionary impact from those tariffs. So that side of things in the short term, not looking good. But what are they doing to look at the longer term impact of how they can start to achieve growth? ironically, Ian, as much as you and I are here as business owners complaining about the increase in national wages and the increase in national insurance, so the cost of labor is going up. One byproduct of this, which I think the government is actually thinking about when they're doing these changes, is it forces businesses to look at where can they automate, where can they be more efficient, where can they start utilizing AI, where they perhaps might have had two people do a job. And I'm seeing this in our hospitality sector clients, where we're seeing hotels, restaurants, etc., implementing concierge services through AI rather than having a human being there, because they just simply cannot afford to hire someone with these increases. So part of it is that increases productivity of a business and an economy. So they're looking for increased productivity. So that's one byproduct of these changes. The second one is that they're bringing in planning reforms, which will have a huge impact. So planning reforms mean more building, more construction, more infrastructure, means more growth in the economy. They're bringing in plans for AI. How do we basically capitalize on AI opportunities? So they're going to be creating AI growth zones. They're going to be increasing computer resource capacity of the UK. So there's a lot of long-term projects there, but in the immediate term, I think we're in for a tough year, and a tough year in terms of the government debt level is at the highest since the 1960s. No growth. So I wouldn't be surprised, Ian, if we're back here with the autumn statement talking about tax rises. I don't mean to be a teaser, but we all have to plan. The point of Swoop and other businesses, plan for what could be the worst case scenario, build your contingencies now, build your cash piles now, so you're ready for whether it's tariffs, tax increases, and other things that may happen in the world over the next 12 months.
Excellent. The other big news story is that there's lots of cuts to welfare. Is that going to affect SMEs at all?
I mean, I think, look, at the end of the day, who wants to see cuts to welfare? Who wants to announce cuts to welfare? But if you look at the statistics in terms of in the last 12 months alone, there's been the additional 400,000 people who have gone on welfare because they cannot work. And whether that's through mental health issues, whether it's through disability, whether it's through long COVID, etc. And if you continue that trajectory, the country cannot afford its welfare bill. So I think what they're trying to do there, and I'm not sure how they're going to achieve this. I'm glad it's not my day job, to be honest. But yes, you have to put it on a more sustainable trajectory. So unfortunately, there has to be cuts. But I think they're trying to team that up with a path back into work. So I think they're going to have to get buy-in from the private sector and businesses to help with that path back into work. And I think they're going to have to create schemes around how you get people to be able to identify what can they do, as opposed to saying to them they can't do anything. They're trying to create that positive aspect of it and create that path to work. So again, I'm waiting to see over the next year, will there be some schemes announced like that, similar to the apprenticeship scheme, or give a grad a go scheme, something similar to that.
Okay. And that's obviously going to be a little bit more difficult to persuade employers to do that if suddenly it's more expensive to employ people.
There it is. Correct.
There it is. I know Swoop is going to be joining on with the voices from the Chambers of Commerce and the Federation of Small Businesses and others to ease the pain of SME owners in the next budget. I mean, you've said that there'll probably be tax rises, but what would you like to see in October?
Yeah, I don't think it's coming, but I think the most punitive decision that a government has made in recent times is the hike in national insurance and the hike in minimum wage. And I understand they're trying to create higher value jobs, but at a time when the cost of doing business is so significant, and at a time when we're dealing with so many uncertainties. Look, if I was to lobby for anything at all that will solve our growth issues in this country, I would say go back and do a deal with Europe on, I'm not asking that we return into the European Union, but you need to create stronger trade alliances with Europe. 14,500 businesses in the UK have stopped completely trading with Europe. And we wonder why our growth levels are going to be at 1% or 0%. They have completely stopped trading with our nearest trading partner. So I think if there was one effective thing that a government could do, even to counterbalance tariff threats from the US, it's to not re-enter the European Union, but go and do some good deals, good trade deals, whether that is equivalence, where we don't enter a customs union, but you create equivalence rules to reduce the barriers and friction that has been caused. And as the British Chamber of Commerce have showed, the administrative burden on UK businesses trying to continue to trade, it's no wonder 14,500 have stopped. So I think if there was a number one shot in the arm you could give the economy and give UK businesses, that would be it. And I don't know why they're not talking about it, but that would be it. The second one is, if you truly are looking for growth from businesses, you do not continue to tax businesses and ask them to carry the burden of debt repayments and welfare payments. You have to encourage entrepreneurship. So I think even creating the operating environment, creating you're all welcome here. And I know it may make good sort of sound bites when you talk about taxing non-domiciles and bringing them into the inheritance tax system. All you've actually done is have thousands of people, wealth creators, leave the UK and not return. And other countries are now getting the benefit of that. Those wealth creators were investors in UK startups. They were putting their capital back in. So I think that the overall sentiment around the business community and those who were successful in business, worked hard, exited and were being penalized for staying here. I think you need to come back to the business community and say, we've heard you, and here's our path to recognizing entrepreneurship and helping reward that. I think the sentiment and the messaging, let's even start with the messaging. I think that's where they need to start. But in the meantime, go back and do a deal with Europe.
I was going to say, as ever, the message with Swoop is the best time to find your funding when you don't need it, but probably most people need it right now.
Yeah, Ian, I've been through the 2008 financial crisis, and actually my whole passion for starting Swoop came from experiencing what small and medium businesses went through in that crisis. And, funding was immediately taken away. Now, thankfully, we've been through COVID, we've been through wars, been through a high interest rate environment, and thankfully the liquidity for the credit that's out there for businesses is in a much stronger position now than it was in 2008. But the rules of the game stay the same. The rules of the game are, you never go for funding when you desperately, desperately need it. I mean, there's still funding there for you, but you're going to pay more for that than if you do it in a planned environment. If you are forecasting out, you need to be putting in stress tests saying, what happens if tariffs become a reality? What happens if, you just have to keep doing these. What happens if my customers are starting to delay even further on payments and they're really stretching? What happens if I can't use time to pay anymore? All these what ifs, just have a look and see, do you need to build a contingency now? And whether that's cost cutting on your essential services by saving some money there, or whether it's by getting some funds in and just having them in a deposit account for the rainy days. This is why businesses fail. 55% fail because they run out of cash. So that's our mission in life, is to keep businesses open and keep them growing.
Andrea, thanks very much indeed for joining us and giving us your perspective on what's been happening in the world. If you are an SME owner and you haven't signed up for Swoop yet, click the link. Swoop is your virtual CFO, covering all of your funding needs from a credit card to a commercial mortgage. We do grants, borrowing, equity, R&D tax credits. Basically, if it's got a $ in front of it, we do it. So thanks very much, Andrea. See you next time.
Thanks, Ian.